Yo guys, what's going on? Welcome to another video, and in this video I'm going to be showing you guys how I managed to make $800 in around 30 minutes on trading Nasdaq. So before we get started, we're going to play the execution video. If you manage to watch that, you'll be able to see how I entered the trade and broke it down, and then I'm going to give you a more in-depth breakdown on why I decided to enter that position after the execution video. So enjoy and see you soon. Right, so let's get straight into the charts and have a look at why we ended up catching this buy move here. And this was as a retracement on Friday, even though the market was absolutely tanking to the downside. So if we sort of bring the chart back to around this area here, and then let's have a look at where the market was. This was say a 4-hour imbalance. So on Friday around let's remove this, all of this as well here, like so. So if we put the sessions on, let's just put this session stuff on here. Just kind of helps me indicate where everything is. So this here, this grey area was Asia session, so I marked it as a grey area, and then you can see how with London session prices automatically falling to the downside, and it's clearing out the Asia session low. So at this point, price has taken out the prior weekly low, as you can see to the left, prior weekly low. What I'll do is actually just going to change the settings on this to today's only. Does that work? It does not work. Well, apologies. Okay, let's ignore that. Okay, anyway, so you can see if we go into the higher time frame here, NQ is currently trading back down, and it's taken out the prior weekly low, right? This is from last week's price action, and then this week has gone back down to take out the prior weekly low. With that being said, a lot of the time it sets up for good price action once price already liquidates and takes out the liquidity below the prior weekly low to start seeing bullish moves, right? But price is currently a 4-hour fair value gap. This is a higher time frame sort of play, right? My aim at this time is what I sent to the VIP members. Again, if you want to get involved in VIP, check the free channel out. Link is all in the description before I lose you guys, because it's going to be a decent video with a lot of information. So before I was looking for buy positions, I was also given the possibility saying that if price closes below this 4-hour fair value gap and starts to close below this, then we were likely to use this as support to attack the lows, right? So that was my bearish idea after price moved along. So if you give it a few more hours and see exactly what happened, you can see that here was 6 a.m. So we are 2 hours before US session actually opened, and price, look at that, we had a cheeky rejection towards the upside here. This would have induced a lot of buy power going into this market, because price is tapping into a key level here, so a lot of buyers would be wanting to get into buys at this point. However, for me, my timings, I normally around about 15 minutes after New York open. It's when I start to look at the market, so that would be around about, say, if you mark around about 9:45, but we'll get into the lower time frames after. So the next candle is let's see, this is 8:45. Let's get 2 more candles. This will be 9:15, and then this will be the New York open. So as soon as New York opened, we push straight towards the downside, right? So once we're getting this push to the downside here, I've also marked up, if we get rid of these, I'm marking up the prior key swing lows here. So these are the daily level lows, right? So if you mark that out and bring that across, and zoom out a little, and we just bring that across here. So this is sell side that I marked here, and then we also have another key sell side here, which is equal lows down at the bottom on this side, right? So if you mark that over there as well as sell side. So this is exactly what I was doing. So this is what I was trying to say. I was trying to say that if price leaves these 2 levels here, this is going to be classed as engineering liquidity. If price pulls back up towards this 4-hour fair value gap, then we could potentially see a price push back towards this level. So these are all the steps that I've been using while sort of breaking down this trade as the market's moving towards the downside. So if you go to the next 15-minute candle, we'll be able to see that price is now pushing even lower, and it's likely to take out the draws and liquidities down here, right? At the same time, I've also got ES open on the right side, right? So this big spike low here that ES created, where the green sell side is, if you look to the left of, look on the left, no, it's not that one, it's actually this one, wrong one, sorry. If you look on the left where my cursor is, right, on both charts, you can see them moving, right? This one is on this level here, but on the left side, it's also, if I just put a line here, and I also could put a line here on this side. So these are the correlating, this is the time, this is SMT that we're looking at here, which is smart money technique. You can see across both correlating pairs, right? Currently, Nasdaq is trading towards this green line. However, on this side, ES failed to take it out. So everything within this area here, this is New York open, failed to take out the green line. However, if you go 15 minutes after, you'll be able to see the price cleared out those green lines, whereas on ES it failed to take out the green line below. Look, price failed to take out that low. Obviously, eventually it did take out that low, but this time it failed to do so, and this was SMT. This showed me that, okay, there could be some reversal coming in, right? So now at this point, we go over to the 1 minute time frame, and we bring it back a little, because it's kind of pushed it ahead, isn't it? Why can't I move it any further? What the hell? Okay, so at this time, price is now pushing down to clear out the sell side liquidity, and this is exactly what I wanted. I didn't want to kind of enter a little higher up because it was very bearish, right? So if price is leaving these liquidity levels, it's likely, showing that price may want to push a bit further lower. But what ends up happening is right at 10 a.m. price ends up immediately pushing towards the downside, right? You can see these 2 green lines, and then the next candle breaches all sell side liquidity there, and then we have created, what have we got over here? We have got a 1 hour fair, well, not 1 hour, a 1 minute fair value gap, right? So I marked that up. So this was my level, saying that if price breaks above here, this is my PDO rate, this is my entry, right? That's your 1 minute fair value gap right there. And then what you do is you can see that on the next candle, price immediately pushes back in the range. However, I'm not entering right now. I'm not entering, right? I'm only going to enter once price invalidates this 1 minute bearish fair value gap and flips it into an inversion fair value gap, right? An inversion fair value gap is if price pushes above this and closes above, this should then be acted at, it should then act as support because it's now a balanced price range, and price should now push back up towards the highs, right? So what happens? Price spikes here. I've not entered yet this time. Price closes back inside. And what happens in the next minute? We then see that price pushes back in. Okay, so what could happen at this point is price can continue going lower because it's respecting it. So I then wait another minute, and then you can see this candle immediately closes outside, right? So this candle closes outside, closes above the bodies on the left, right? So what I've done is I then get my marker here, put it there, put the stop loss just below the low of the fair value gap, and I'm targeting the highs right here. I then change this to an inversion fair value gap, like so. And let's just, go crazy. Buy 500 contracts, stop loss below that low right there. Don't worry, this is how we make big bucks. Trading demo, paper trading. Now, my main target obviously is to clear out these, this whole sort of bearish move down. You can see this bearish move down. However, this blue box here, right, was our 4-hour inversion fair value gap. You can see that you have a 4-hour fair value gap on the left here, right? It's dragged across. It now should be used as support to push price lower. This is bearish order flow. So I'm not targeting anything crazy when I'm buying a retracement, right? I'm not targeting anything crazy at this point in time. So my main target would be 50% of this drop, okay? So if you mark the highs and bring the fib to the lows here, say for example, the reason why we do this is because we now know that price should not go back below this swing point low. We have created a swing low here, right? We know that this level here, let me just move it to the left so you guys can see, this swing low here should be the low, and price should now push towards the upside. That's what we're anticipating. That's why we're getting into this buy. We're not hoping for the best and hoping that it goes there. We are anticipating that price should now start retracing and get to where? This 50% level, which is this line here as a bearish DR. You can see the 50 DRT, this is 50%, right? So this is where I wanted to really target, and I did want to hold a runner if price wants to continue and fully reverse this move back into this, inversion fair value gap to kind of push back above into there, right? So now that we're in the trade, if we play out, you can see the next candle immediately came back in, and this is where it tests nerves a little, right? Because this could have been straight fake out, straight take out your stop loss, and then maybe even potentially go back up from there. But it doesn't really matter because my stop loss, this is a strategy. We're keeping it, keep the stop loss nice and tight. You can see on the next candle, what did we see? Immediate rebalance and then push straight back up. So this is a lower time frame. What you're getting on the lower time frame here, we're getting some, recess of an order block on like the 15-second time frame or something. But on the 1 minute, you can see that price continues pushing back up. Once you get this break out here, we're then expecting for price to, why is it in the middle? I don't like that. So you can see on this price, we have a breaker block that's about to form. And this is exactly what I was showing on the execution video. And once price ends up closing above that, price should not push back below this breaker. Now, if you were aggressive here, you could have re-entered, added more positions here within this breaker, brought the stop loss a little higher. But this wasn't an A+ setup for me. This price was very bearish, so this was a bit of a risky one trying to catch this reversal. And you can see that price continues pushing up here. And then, as you can see, we're getting, these 1 minute fair value gaps, which is right over here. You can see another 1 minute fair value gap right there. We're expecting these to hold as support to push price up. And what happens here on the next 1 minute candle, you can see, bang, price respects this 1 minute fair value gap, takes out the internal liquidity, goes straight to external liquidity here, and price keeps on pushing up. So once a price gets to this 5 minute fair value gap, which is, not 5 minute fair value, sorry, the 50% level, this is where I decided to take partials. I didn't want to take majority of the trade and bring SL to entry. However, I ended up closing the whole position at 50%. But look what happens at this 50% level, right? It dances around, it does move higher, then comes lower, and then price absolutely pushes all the way back down, right? So this is why premium discount is very key when you're looking to enter. You want to kind of get this low hanging fruit. That trade there, when I closed it, you can see in the box, it's a 1 to 2, right? 1 to 2.5 doesn't really matter. 1 to 2, I was still happy taking that 1 to 2 because I risked what, like 250, made 800. It was a little less than that because I did take partials, but you can see this all happened in the space of from there to there, about 20 minutes, and that's it. Simple. Obviously, yes, price did push back up, I think, higher, but this was a setup for your bearish setup. If I speed this up, it's taking a bit too long, isn't it? Like so, price ended up sweeping that high. Where did it tap? Where did it tap? My inversion fair value gap, right? Which should now act as resistance to push price back down. So this would be your bearish 4-hour imbalance. Price should use that to push price back down. What occurs? There you go. Price goes and attacks the sell side for the buyers. Simple price action. I was happy with that buy to end on Friday, but you could have also caught the sell. But this was all within the timing, and this is what I say time and time again. Look for this sort of timing to enter your trades, right? So this is where I should have got my entry, which I did between 9:45 and 10:15. This is the one sort of timing. I'll write it down here. So AM session macros. You have 9:45 to 10:15, and then you have 10:45 to 11:15. So these are my 2 AM session macro timings. So any setup that forms within these timings and it follows my analysis and sort of strategy, we look to enter. This is the execution for my timings. I don't enter at 9:30 because that is very, very risky. You can see that price can just potentially just drop down and immediately rebalance to the upside. We don't want that. We want to see where price goes, and then we potentially could get an expansion or a reversal here within this timings, and that's exactly where I entered it, right at 10:05. It meets my timing, tick, let's go, enter, and then price takes off. So again, if I bought stop loss to entry, we would have managed to catch a little bit more higher into this fair value gap, so price would have hit eventually that TP2 right within that 4-hour fair value gap. But that was all from me. So that's pretty much it. There is some more PM session stuff that I do explain, but that will be a lot of, this is what I'm willing to share for free on YouTube. But I hope you guys enjoyed that video. Leave a like, don't forget to comment if you find it very insightful. But it's been Oasis FX. Peace out.